Hi, my name is Sheree Bergeron, and this video is going to show how to convert from cash basis to accrual basis. So in this problem, we have CRT, and they maintain their records on a cash basis, and we want to see what our income would be on an accrual basis. So there is a shortcut way to do this, and I've typed it out and color-coded it, and we're going to go through and show you what it means, and then we're going to actually work the problem. So the first thing that it tells us is that CRT collected $134,269 from customers and paid $50,926 in expenses. What this is telling us is that they had an excess of cash inflows over outflows, which is a cash basis net income of the difference. And so we can type that out and see what it is. We'll call it the excess of cash collected over cash dispersed. And I'd just like to remind you that that is actually just cash net income, okay? And the way that we'll compute it is we'll say that we received $134,269, and then we'll subtract out the cash outflows, which was minus $50,926. And so we see that our cash net income is $83,343. Next, we want to analyze our balance sheet accounts to see if they would affect our net income for an accrual basis. And so the first one that we have is accounts receivable. And I'd like to go ahead and remind you the difference in accruals and deferrals and how you can remember them. So there are two types of accruals, and it always means that cash has not changed hands, but the event has happened. So in the case of a revenue, we've earned the revenue, but cash hasn't changed hands, so they owe us the money. So it will always be some type of a receivable because they owe us the money. The other option is that we have an expense that has been incurred, so that has happened, but cash hasn't changed hands. That means we owe for it, which means that it will be some sort of a payable. Deferrals mean that we are deferring the revenue because we haven't earned it, but we did receive the money. So the example of a deferred revenue is anything unearned because we have not yet earned it. We got the money up front, but we haven't earned it. And an example of a deferred expense is anything that is prepaid or some other asset such as supplies, etc. Okay, so those are examples of deferrals. So once we recognize those, we can apply the rules that are given up here. Let's look at the first one that we're given, accounts receivable. So we come over here and we remember that a receivable is an accrued, and I'm going to go ahead and make sure that we know, an accrued revenue. And this is an revenue, and this is an accrued expense. All right, so we're talking about accrued revenue for this one right here. So we're going to follow this rule. It says negative beginning accounts receivable plus ending accounts receivable. So we're going to say negative beginning accounts receivable. So I'm going to click on the beginning and put that in as negative, plus ending accounts receivable. So I'm going to add that one. So what I'm saying here is negative 8768 plus 14914. Whatever our answer I get is its impact on revenue. It is going to increase revenue by 6146. So over here, I'm going to say add, and then I'm going to say that we had an increase in accounts receivable because we went from 8768 up to 14914. So we're going to call that an increase in accounts receivable. And the number that we need to use is a plus 6146 because that's the number that we got right there. Let's look at the next one, unearned service revenue. So unearned is a deferred revenue. We can see it right here, deferred revenue. And so we're going to go by this rule. So it says plus beginning unearned minus ending unearned. So we're going to put that in. We're going to say plus beginning minus ending. And the number that we get is negative 825. So we're going to go describe that. And that means since we got a negative, that means that we're going to say less. Then we're going to just describe what happened to unearned service revenue. It increased. So we're going to say increase in unearned service revenue. And we're going to make it go down because we got a negative number when we put it in. All right, let's look at the third one, accrued expense. So it tells us that it's an accrual, and it tells us that it's an expense. So we're going to look at it and see what we should do. Accrued expense is right here. So it's minus beginning and plus ending. So it's minus beginning and plus ending. When we do that, we get a negative number, and we're going to talk about what that means. And we're going to come over here and we're going to say that this was an increase in accrued expenses because it went, no, actually, I'm sorry, it was a decrease. It went from 3 down to 2. So we're going to say decrease in accrued expense. All right, and then let's think about what that does. If we have less expenses in our income statement for the accrual basis, if we have less expenses, what does that do to net income? Because that's what we're showing the impact on. These were easy because if net income goes, if revenue goes up, net income goes up. If revenue goes down, net income goes down. But here, expenses went down. What does that do to net income? Well, that makes it go up. So we're going to put this in as a positive. So we're going to say add. And that's because this negative showed us the impact on expenses. Okay, let's look at prepaid expenses. Prepaid expenses is a deferred expense, and so deferred expenses are right here. So we're going to take beginning prepaid minus ending prepaid. So we're going to put in the beginning number as positive and then subtract out the ending. And we come down to a negative 1404. Remember, that's what its impact is on expenses. So let's go describe it first. Our prepaid expenses went from $1,835 to $3,239. So we had an increase in prepaid expenses. All right, and if expenses went down, then that adds to net income in the amount of 1404. So in order to get to our accrual-based income, we'll start with our cash-based income, which was the $83,343. Then we'll net these numbers together, and we come down to $91,463 as our accrual-based income. Now that was the way that we do this by using these rules, but I also want to show you that you don't have to memorize those rules. You can just think your way through this. So if accounts receivable went up, that means that we debited accounts receivable and credited sales, okay? And as you can see, that was the net transaction of that increase, by the way. So as you can see, we didn't have any cash for that, but we did increase our net income, and that's why we increased our net income for that. Let's look at increase in unearned service revenue. So if unearned service revenue went up, that would look like a debit to cash and a credit to unearned. Well, as you can see, cash went up, but for accrual-based purposes, we're not calling it revenue. So we need to subtract that back out. And when I say we're not calling it revenue, it's because it's got to stay in unearned while it's being deferred. So it's a liability until we earn it. Now let's look at decrease in accrued expense. So accrued expense, we're right here. We're talking about an accrued expense. And so it's a payable. So in order to reduce a payable, it would be a debit to accounts payable, and we pay that with cash. So for this effect of this transaction, the net effect of this transaction, we reduced cash. But for accrual basis, we didn't hit an expense during this transaction, and so we need to add that back. All right, let's look at increase in prepaid expenses. So an increase in prepaid expenses would be something like supplies and cash. Here you can see that cash went down, but I didn't hit an expense yet because it's considered an asset. It's not used up yet. So for cash basis, I subtracted it out, but for accrual basis, I need to add it back. So you can do it either way. You can either use these rules that will always work, and or you can think your way through the journal entries. Now, if you're going to use these rules, I wanted to show you an easier way to remember them. I put accrued revenues and accrued expenses in one color. That's because they're treated the same. Watch. They both start with a negative beginning and an add ending. All accrued expenses will do that. Deferrals work the same way. So deferrals have plus beginning and minus ending. So that's easier because you only have to remember two things, how do accrueds work and how do deferrals work. So I hope this helps, and let me know if you have any questions. Thanks.